Hi, welcome to valuationpodcast.com, a podcast and video series about all things related to business and valuation. My name is Melissa Gragg, and I'm a financial mediator and business valuation expert in St. Louis, Missouri. Today, we're discussing a fractional CFO's role in business growth and exit strategies with Alina Rivera. She's a CEO and founder of Advising Puerto Rico, LLC, and she specializes in business valuations and strategic planning. Her expertise also includes internal audit, due diligence, capital raises, feasibility analyses, and transfer pricing for compliance purposes, among other services. Welcome, Alina. How are you? But do you see other times where you've been able to look at the financials and say, oh, something's going on here?
Yes. For example, I have this client that it's a restaurant, and they were telling me that they needed to cost G&A, general administrative expenses, that was the issue, that they didn't know what to do because they needed the people. And when we started going through all the financials, it was actually related to not G&A, it was the cost of goods sold. Mm-hmm. So it was a product that they were buying, and after COVID, they didn't notice, but it was misclassified to G&A. And that together with some of the costs, direct costs from the employees that work directly in the restaurant, instead of administrative matters, it was that misclassification led them to have to don't understand that actually the business was having issues. And restaurants are, it's really hard, because unless you are a restaurant with, and it's sad, because when you are a chef, it's something that you do with your heart. So it's very common for them to don't have the expertise. So we worked together with them. We went to the supplier. We looked for better pricing. What we did is, okay, you are charging me this for these particular items. How can we change those items so we don't need to like lower our standards? Are there any other options? Then we did that. So that was looking at just the financials. Let help them. And that particular client also, we were looking at the rent they were paying, and they were worried. I'm like, let's look for another location. It's going to be a better location, and you're going to pay less if you buy the location. And they were surprised. How are you so sure? Because you have to look for that. So those are part of the things that you do. And I had another client that when the business is having a lot of revenues, that can lead to the owner don't understand that you're having problems, cash flow problems, because you have lots of revenues. So we met with the client, we asked for financials. Oh, I have this. And when I look at them, they didn't actually have financials. It was just the accounting system was used to invoice some clients. Other clients weren't invoiced in that area. Then you start having issues with government compliance and paying taxes. And that's when she, discovered that, oh, I'm having issues that I didn't know of. And talking about forensics, I told her, this is not the moment to try to prove that something is happening, but definitely something is happening, because clients don't understand that when your financials are not, you don't have your financial in place as you should have. The problem is that's an opportunity for other people to take advantage of.